When's the right time to buy a piece of real estate? Well, there's no simple answer to that because it depends on who's buying it. There's various categories of buyers. And to explain that, I want you to think about speculators. I want you to think about renovators. I want you to think about end users. And I want to think about investors. Now, we could go on and talk about developers and so on, but those four categories, and the answers are different depending on which category you're in. Let me take a minute and expand on each one of them. First, we've got the speculator. The speculator is a guy who's buying a piece of real estate with the intent of turning around and selling it in a short period of time for a profit. He's counting on a change in the market. He's counting on the market going up in value, and he wants to ride that crest. What the speculator is a day trader, but instead of trading on the stock market, he's trading in real estate. So you got the speculator. Then you got the renovator. The renovator is, again, counting on buying a piece of property, keeping it for a short period of time, and then selling it. He's planning on doing some improvements to the property and working on the philosophy that the property will be worth more when it's done up than the cost of doing it up. But he, too, is going to be selling in the short term to make a profit. Then you got the end user. And the end user is typically the person who is buying a piece of real estate, if it's a homeowner, to live in it. If it's a business owner, to operate their business in it. But they're buying the property to utilize it themselves. Keep it, and keep it for the long term. And then you've got the investor. And if you followed along the series I've been doing to date, you'll know that the investor is the guy who's going to buy and hold. If you buy a piece of real estate with the intent of keeping it for a year or two and then selling it, as far as I'm concerned, you're a speculator, you're not an investor. If you're an investor, you're going to be keeping it till the property dies or you die. And it goes on to your kids. You're going to keep it forever. So the answer is very, very different. Is timing important? Timing's critically important for the speculator. He's got to get in at the right time. He's got to get out at the right time. You remember that meltdown that happened in the U.S. back in 2008 where all these properties went in foreclosure for the bank? Almost without exception, those properties were being acquired by speculators. I had a friend who operated a RE/MAX office in Sarasota, Florida. He told me 1 year the properties went up 80% in value. So what you had people that were committing to buy a property, closing 6 or 8 months later. They didn't even have the funds to close. They had no intention of closing. What they were going to do was they're going to assign the contract before closing. Well, when the market hit a brick wall, they couldn't do that. They walked away. Those are speculators. All right? And the renovator, probably not quite as critical, but because he's planning on selling in the short term, timing's important. So he needs to buy right. If he makes money by renovating the property, but he loses money because he's in some cycle where the property values are going down in value, he's got to be much more careful if he wants to turn a profit. So if you're a speculator or a renovator, you got to watch the market to decide whether it's the right time or the wrong time to buy. I believe in real estate. I absolutely believe in real estate. And because I say that, I say myself as an investor or myself as an end user, there's no bad time to buy real estate. It's always the right time to buy real estate. Let's suppose you're an end user and you're buying a property to live in with your family. And let's suppose you acquire the property and you move in, and then over time, because markets do this from time to time, like they did in 1980 or 1990, the property goes down in value. But you're not planning on selling. You're staying there with your family, enjoying it. You're going to raise your family. You're going to create memories in that home. So you keep it for years. The fact that on book value, its value goes down and then value goes back up, that only matters if you're going to refinance or you're going to sell. If you're not going to do either one and you can carry it, the mortgage is in place and you can handle it, enjoy it. And what about the investor? The investor, I would say, if the property I'm looking at acquiring can rent out and the rent carries the mortgage, buy it. Buy it. You know, sometimes people, and I talk to investors, and I can't really comprehend their mentality. They say, well, you know, if I bought it, if I waited a little bit, I might have got a little cheaper if the market's falling or whatever. They're trying to time the market to get the best deal possible for the property that they're investing in. Let me tell you a couple stories. Back in the 80s, I bought 4 semi-detached in St. Catharines. I still own them, of course. I bought 4 semi-detached, and I paid $67,500 each. I paid a little bit on the high side. I probably should have got them for about $64,000. Paid $67,500, so I paid about 5% too much. Today, I don't know, they're worth 5 and change. So does it matter whether I paid 65 or 67.5 or 64? It doesn't matter at all. I rented them out. The tenants paid the rent paid the mortgage isn't paid off. I own them now. I'm delighted that I own them, and it's academic what I paid for them. It flat out doesn't matter. In 1990, right at the peak of the market, I bought a back split in the north end of St. Catharines, and I paid top dollar. I paid $160,000. The market hit a brick wall, and prices fell, and a year or a year and a half later, it was worth $140,000. I lost 12-15% on value, but I wasn't selling it. I wasn't refinancing it, so it doesn't really matter. Today, it's worth $700,000 to $800,000 in there. So the fact that it went from 160 to 140 and then on up and then down a little bit doesn't matter, because I'm not selling. I'm not refinancing. I'm building an investment portfolio. There's a passage in Scripture. Let me share it with you. It's in Ecclesiastes. It says, "He that observes the wind shall not sow, and he that regards the clouds shall not reap." What's it saying? It's saying that if we, as a farmer, if you're watching the weather and watching the forecast, you're never going to go out and plant your seed because they might get washed away. You're never going to go out and harvest the crop because the rain might come and they might get drenched before they put them in the barn. You're never going to do what you should do. And if you spend much time, I don't have a lot of use for the media because the media is more interested in selling newspapers or ratings on television than they are in telling the truth. They want sensationalism. I don't watch it much. Because if you do that, they'll always talk about if the market's going up, it's going to be a bubble, it's going to burst. If the market's going down, it's going to be tanking and the economy shot. And they've always got a reason why you should sit on the sidelines. Let me say this. I bought my first property when I was 19 years old. I've bought property years, and I've never sold them unless I've moved. I can tell you over the years, looking back, I've never bought a property and regretted it. Never. But there's lots of properties I didn't buy and regretted it. The property on Glenmore Road I drive by. Whenever I drive by, I'm kicking myself. I didn't buy it. Property in Thorol, I had an offering on it, and I changed my mind about submitting it, and I'm kicking myself. I didn't buy it. So I can tell you, if you find a property, if you're an investor now I'm not talking a speculator, if you're an investor now and you find a property that speaks to you, it's a good, sound, solid property, makes sense, good location, you can rent it out, you can carry it, and you got the money to buy it, do yourself a favor, buy it. You say, well, Wayne, the market is softening, and if the prices go down, I might have got it cheaper. Let's have that conversation 10 years from now, and let me hear whether you think it's a good thing or a bad thing you bought that property. I tell you, you'll never make a mistake buying real estate if you're keeping it for the long term. Thanks so much for joining me. I'll talk to you again next week.